Hi, my name is Kenneth. Welcome to another episode on our YouTube channel. As much as I enjoy outdoor shoots, sometimes when there's a lot of numerical data to present, I find that it's better assimilated using PowerPoint slides. So today we're going to talk about key mortgage tips. I've presented in quite a few seminars, and usually one of the key questions that client asks is what happened since 2018 July when the ABSD has been adjusted. Now ABSD stands for Additional Buyer's Stamp Duty. Now this is what you pay for as a Singaporean or permanent resident or foreigner when you buy properties here. As you can see, this chart shows that Singapore citizens don't pay for any extra buyer's stamp duty on the first property, but the adjustments such a way that from the second and the subsequent property onwards is gone up to 12 and 15%. So this is a very important chart to take note of, especially for clients who currently own one property and plan to buy a second one. In most cases, this is where we advise clients to do a decoupling. Now, the other revision since the 6th of July 2018 was the LTV involved. Now, LTV stands for loan to value. This is the amount of loan that you can borrow as a percentage of the purchase price or the valuation of your property. At the same time, the loan tenure has also been adjusted. So this is another very critical slide for clients to take note of when they're buying first or second property. What we highlight in this area is in the event you don't need a full 75%, but you prefer to have a longer tenure because that affects your monthly installment greatly. We usually ask our clients to borrow only 55% for the first loan so that the loan tenure can be stretched up to 75 years old. The next important tip that we want to talk about is the mortgage loan. Now in this example, it shows how a client can disregard his package or have it managed. Now disregard meaning that after purchasing or after refinancing, leave the rates perpetually to what the package states every year. Now having it managed means the loan is being reviewed on a regular basis to make sure that the client doesn't pay more than necessary rates. Now in this example, let's take that the client has a loan of $1 million over a tenure of 30 years and he has chosen a package that's fixed for 2 years, 2.1%, and then step up to 2.4, 2.8 and 3.2%. Now if his loan is disregarded, the total interest payment will be $519,933. Now, if the client chooses to have his loan managed and reviewed on a regular basis, we assume that from the third year onwards, he gets a loan interest of 2.1%. Of course, he will save even more if we are able to get a better rate or reduce his loan tenure because of the review. Now, in this instance, the total interest payment will be $348,704. From this simple example, of a loan size of $1 million, we can see that this client, by having his loan managed, actually saves $171,229. So this goes to show how important it is to have your loan reviewed regularly and have it managed. So what's more than just getting the best rates? There are other things that we need to look out for. For example, loan features. There are features like prepayment, waiver of penalties, or free conversion. The other area that we constantly remind our client is to know your letter of offer well. Now this is the contract that the bank provides. Not just rates, but also lock-in period, the penalties, the clawback. And in fact, the most overlooked area would be the lock-in period and forgetting to refinance. There's also costs involved, usually legal and valuation, for leaving the bank and then going to another bank. And these are the areas that we cover for our clients. It is also a good practice to always refinance to the lowest rates. Be updated, kept abreast with what's going on in the market, and also as far as possible, keep a clean credit bureau report. Cancel all unnecessary credit facilities. You can also minimize car loans by using your equity cash out from the property. And one important tip is always to scan and keep a soft copy of your year-end loan statement. So what are the investment ideas that we bring forth to our clients? Now, a property is a very important asset which you can leverage upon. Now, refinancing means you can keep your loan monthly installment to a minimum and therefore your spare cash for other use. Some clients would choose to decouple from the property to buy two, and that's one option to invest. Or some want to gear up and choose an equity cash out, whereas you have paid down your loan, and this money can then again be used for other kinds of investment. If you have found our sharing to be beneficial, do let us know or share this video with others. On the other hand, if you would like us to manage your loan or expound on the different tips that we have shared today, also write to us at this email address or drop us a WhatsApp message. See you.